Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, interest rates continue to move to the upside with the 10-year making a nice upward zigzag pattern. Bitcoin's in a really strong wave 5 to the upside in its 5-wave pattern, and the market opened to the upside today but closed to the downside. Two recent gaps on the SPY have both now been filled. So where do we go from here? Let's take a look at the charts. At the time of this recording, it is 11 p.m. on Monday evening, and currently the futures are down 18 points, so pointing to a slightly downward open, but as you know, there's a long time between now and when the market opens in the morning. Well, here's a current look at the charts. Two qualified zigzag patterns to the downside now. A couple of gaps have been filled. A lot of stuff on that chart. So let's break it down. Here's how we got there. You can see that on the 7th of October, we had a gap up, even though the market opened, traded much higher, and then closed near the open. That might have been a telltale signal, but at this point in time, you're thinking, all right, do we have something moving to the upside here? This could be what's known as an island reversal, where you have a gap to the downside and then a gap back to the upside. Of course, it could be the opposite as well, but the point is that when you have two gaps with some bars in the middle, these bars are kind of left floating out on their own between the two gaps. That's where the island reversal term comes from. And often when you have an island reversal, the market does indeed reverse, and that could have given potential movement back to the upside. But it didn't play out that way. In fact, all that upward move did on the 7th was move up to fill that gap that had created from the gap down after the 27th of September. And now we've moved down and filled the gap in today's trade that was created on this gap up on the 7th. We still have this downward zigzag intact that we highlighted in the last recording, so that's still qualified, and we now have a new zigzag pattern to add into the mix. That's this one here with a 55% B-wave correction, call it a 50% correction, where we're looking for 100% extension there. So now we have target prices at 420 in the original zigzag. Here's one at 413, and then the 161.8% extension on the original zigzag is down here around 400, as you can see right down here. So now we'll see if the market continues to follow through on these zigzag patterns. It looks like potentially that upward move was just, again, gap filling. However, one thing to note is if we take a look at volume, you can see that there was below average volume today. Market opened higher, closed on the low, but with that lower than average volume, a little bit suspicious of, was this just filling the gap to the downside? Now are we going to turn back higher? You wouldn't think so with both of those zigzag patterns now qualified. In addition to the news globally is not very good. We've talked about the Evergrande property management firm in China having problems. Well, they missed their third bond payment today, and the high yield markets are a complete mess in China, as now there's two other companies that are also in trouble in China, and it's causing the Chinese government now to start to take a look at their lending banks, state-owned banks, to see if there's impropriety there. So that gives the Chinese government something else to go to, but it's certainly creating some concern around the world if there is a full-scale default. And make no mistake, there's a lot of global banks that are involved in this. This is not just a China-centric problem. So perhaps that news is what caused the reversal in the market today. The next couple of days certainly going to be very interesting on that front. I mentioned in the intro that the 10-year was on a really nice upward zigzag pattern. As you can see, interest rates continuing to move to the upside, not helpful to the equities markets there either, especially not the tech sector. Now with this B-wave correction here in this zigzag pattern, you look for a 61.8% extension, which is right there. We're almost there. The 100% would be an extended C wave, but again, the target is a 61.8% extension on a 38% B-wave correction. So could that give interest rates a chance to pause just a little bit, take a little pressure off the markets? Maybe. We're a tiny bit overbought here with where the 10-year currently is and the 10-day moving average, but so far just pretty much straight up following that little small correction to start the month. Looking at the dollar staying strong, consolidating up here at the top of its wave 5. Pretty good little triangle here at the top of the wave 5. Boy, this is just classic LA wave stuff right here, where you have a wave 5 that's complete, and then you go into a consolidation corrective pattern. Flats, triangles, or zigzags are the norm, and so here it's a triangle. Where does the dollar go from here? Do we break higher, perhaps make a new wave 5 high, or is that the end and the dollar weakens a bit? So far the dollar staying strong, a bit surprising to me with all the global liquidity, but I think that just goes to show the concern that's around the world right now, specifically with the repercussions that could come out of China if there is indeed a default. Could the Chinese government really let them default? I don't know. Seems possible at this point in time. And Bitcoin, we also mentioned that in the intro, is just absolutely rocketing higher. The live chart has it pulled back just a little bit, but you can see we're now within this tap box, and Bitcoin has been just spot on with Elliott wave. Elliott wave has nailed Bitcoin this entire year as far as the pattern, and a little bit vertical now. So if we take a look at the 10-day moving average, the fact that it's backed off a little bit as we are hitting this time and price projection for the wave 5, and the fact that we are separated from the 10-day moving average, so a little bit of calming or consolidation would make a lot of sense at this point in time. Perhaps even come back down and test the top of that wave 3 high. You could say that, well, it's done that on the past couple of trading days, and that would be a valid point. Movement back to the upside. Hard to imagine that this is going to be the end of it without going up to at least test the all-time highs in Bitcoin. So that's a question I have for you. Leave a comment in the comment section under the video. Do you think Bitcoin goes and makes a new all-time high on this run? Be curious to hear what your thoughts are regarding Bitcoin. That's a pretty vertical move there. So again, for me, a bit of consolidation makes sense here, but awfully close to those all-time highs. Thought we'd take a look at the Nifty. We've been looking at that in the past few recordings. Really strong movement to the upside. Highlighted that big zigzag pattern in the past, and now we're going through a pretty nice triangle consolidation here as well. This is my favorite breakout pattern when you have a fairly vertical move and then a consolidating symmetrical triangle. That almost always breaks out with some volatility. So as long as, I pointed this out in the last couple recordings as well, as long as the Nifty can hold 49, you have to stay long and feel like there's still potential to move to the upside. But a downward break from that triangle changes everything. But for now, still looks okay on the Nifty. I mentioned in the past that if we lost the semiconductors, which was a pretty good chart moving to the upside there, you can see the trend line with the higher lows, that the market itself may be in trouble. And we did break that trend line, again, as we highlighted in the last recording. But now look, we have a qualified zigzag to the downside here on the SMH as well. Roughly a 38.2% Fibonacci correction in that B wave as well. So as we mentioned, that's a 61.8% extension that's expected. So potentially moving down to hit that level. And so again, not very positive. And with interest rates moving higher, you can certainly see how that issue is playing out. Now looking at the VIX, I'd kind of joked that wouldn't it be fun, especially for options traders, if the VIX were to kind of create a new low instead of the 16 level around 22. That was tongue-in-cheek. Didn't really expect that to happen, but it was fun to take a look at. We had over a week where we were doing that, but we've broken back below that level. So we have doji on the VIX today as we're approaching down near that 16 level. Is the doji going to turn back to the upside? Do we break back to the downside? Looks like something interesting is going to happen out of the VIX in tomorrow's trade. So all in all, awful lot going on in the markets, a lot to be concerned about. Is that enough to drive the markets higher? We'll be back to tell you about it next week. Please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we appreciate it. Take care, everybody. Look forward to talking to you again soon. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.